Are you ready for the next recession? Or will it wipe out your portfolio? This is the passive path where we don't just survive downturns. We use them to grow wealth and create lasting cash flow. Today, I'll show you exactly how to recession-proof your money and how to build income streams that keep paying you no matter what happens to the markets. Let's get started. Why do most investors fail in recessions? It's not because they picked the wrong stocks. It's because they panic. They let emotions drive decisions. Fear and greed take over. They focus on net worth instead of cash flow. Your net worth might look great today, but when markets crash, that number can drop fast. If all you care about is net worth, you'll be tempted to sell when prices fall. That's exactly when you should be holding or buying. The problem gets worse when people try to time the market. They think they can sell at the top and buy back at the bottom. But no one consistently times the market right. Even the best investors get it wrong. An investor I know sold everything in early 2020 when news of a virus spread. They thought the market would collapse. For a while, they felt smart. Then came the rebound. The market recovered fast. That investor missed one of the strongest rallies in recent history. They locked in their losses, and they were too afraid to get back in. Timing the market rarely works, but mastering your emotions and focusing on cash flow, that works in every market. Most people ask, what should I do in a recession? That's the wrong question. The better question is, who should I become before the recession? Skill beats tactics. Preparation beats prediction. At the Passive Path, we teach people to build skills before they need them. That way, when markets drop, you don't have to figure things out in the heat of the moment. You already know what to do. Imagine learning to drive in the middle of a snowstorm. That's what it's like trying to learn investing during a recession. It's too late. Your emotions will be running high. You'll make bad decisions. You need to train before the storm hits. One Passive Path member started learning covered calls during the 2022 bear market. At first, it was just theory. Then they started practicing with small amounts. By the time the market dropped again in 2023, they had a system in place. They generated steady income even as stock prices fell. No panic, no guessing, just a calm, proven strategy. If you don't master your emotions now, the market will master you later. Most people focus on net worth. They watch their portfolio value. They feel rich when it goes up. They feel poor when it goes down. But net worth is just a number on paper. It can change overnight. Cash flow is different. Cash flow is money you receive regularly. It keeps coming in, even when markets drop. It pays your bills. It gives you freedom. It lets you make smart choices without pressure. The Passive Path always emphasizes cash flow first, not net worth. If your portfolio drops but you still have income, you stay in control. You don't have to sell assets at a loss. You can even buy more when prices are low. That's how real wealth is built. Many people forget this. They sell everything and run to so-called safe assets, like gold. Gold has its place, but it doesn't produce cash flow. It just sits there. Sometimes it goes up, sometimes it goes down. Over the long term, stocks have outperformed gold, especially when you factor in dividends and the ability to create cash flow from options. Let me give you an example. One Passive Path community member owned a mix of dividend stocks and real estate in 2020 when the pandemic hit. Market prices dropped, but their cash flow kept coming in: dividends, rental income, covered call premiums. While others panicked and sold at a loss, they held firm. Some months, they even increased their income by selling more option premiums. They didn't care what the market price was. They cared about the money flowing into their account. By late 2020, not only had their portfolio recovered, their monthly cash flow was higher than before the crash. Net worth looks impressive. Cash flow pays the bills. Let's now talk about how to read the market's body language. The market talks to those who know how to listen. Charts are not crystal balls. They don't predict the future, but they do reveal behavior patterns. They show what buyers and sellers are doing. A big red candlestick. Too many sellers, not enough buyers. Price drops to attract more buyers. If that happens at a critical point, like a key moving average, it could mean a trend change. This isn't guesswork, it's observing behavior, just like reading body language in people. When someone crosses their arms, you sense they're defensive. When a stock breaks support on heavy volume, you sense fear among investors. That's what technical analysis teaches. It's not about magic. It's about probabilities. One passive path viewer learned simple trend signals in early 2023. They noticed their stocks losing momentum. Instead of panicking, they used a protective put to hedge their position. When the market dropped, their losses were limited. Their emotions stayed in check. Charts don't lie. They just require translation. Let's keep going. Many investors try to time the market. They look for the perfect moment to sell, or the perfect moment to buy back in. But markets are unpredictable. Even experts get it wrong. False starts and head fakes happen all the time. Prices drop, then recover, then drop again. Trying to catch every turn is a losing game. Preparedness beats prediction. Always. An investor once sat in cash for 3 years, waiting for a major crash, but the crash never came. They missed out on years of growth and dividends. Their money lost value to inflation. Meanwhile, investors who stayed in the market collected income and grew their portfolios. Smart investors prepare. Amateurs predict. So how do you prepare? By building recession-proof assets. It's assets that keep paying you even when prices fall. Look at ExxonMobil. They've raised their dividend every year for over 45 years. Even during major recessions. Even when oil prices went negative. When Exxon's stock dropped in past downturns, they didn't cut dividends, they raised them. That's a sign of strength. One investor bought Exxon shares at $40 per share. Today the stock trades around $120. But the price increase isn't the most important part. The dividend started at around $1 per share. That's a 10% yield on their original cost. Add covered call income. Now they earn around 25% annually on their original investment. That's cash flow. It keeps growing. No need to sell, no panic. It's just steady income. This is the kind of asset that builds long-term wealth. Real estate works the same way. A rental property with positive cash flow is recession-resistant. Even if property values fall, rental income continues. If you use conservative leverage, you stay in control. You don't have to sell during downturns. Your tenants keep paying rent. Your expenses are covered. Your wealth continues to grow. Your future wealth depends on what you buy before the next crash. Let's talk about leverage. Leverage can speed up gains, but it can also magnify losses. Some investors borrow heavily to buy stocks. They use margin. In a rising market, it looks like genius. In a falling market, it leads to disaster. When prices drop, brokers issue margin calls. They force investors to sell assets at a loss. Many investors lost fortunes this way in 2008, and again in 2020. At the passive path, we avoid running portfolios too hot. We use little or no margin. If we use leverage, it's conservative. Some investors use margin just to keep more cash available, not to exceed their balance. That's a smart use of leverage. In real estate, conservative loans can amplify returns without exposing you to forced selling. Passive Path's 2022 poll found that 75% of margin traders underperformed investors who stayed fully in cash. Debt can accelerate wealth or destroy it. Choose wisely. Now let's cover how to sell assets strategically. Most people sell for 3 reasons. They have to. They panic. Or they choose to sell strategically. Forced selling happens when you need cash urgently. Margin calls. Unexpected expenses. This often leads to selling at a loss. Panic selling happens when fear takes over. Prices drop. Investors imagine things getting worse. They sell to stop the bleeding, but they often sell near the bottom. Strategic selling is different. It's planned. It's based on logic, not emotion. if an asset's cash flow weakens, if better opportunities arise, or if your investment goals change. That's when strategic selling makes sense. Forced sellers lose, strategic sellers win. Let's continue now. Let's talk about creating your armor. Advanced risk management. Opportunity readiness. That's how you protect wealth and grow it when others panic. At the Passive Path, we believe you must become the investor who is ready before a recession hits, not someone who scrambles for answers after the market drops. Many investors wait too long. They say, "I'll learn risk management when things get bad." By then it's too late. You wouldn't wait until your house catches fire to learn how to use a fire extinguisher. You wouldn't wait until your car crashes to install seatbelts. Your portfolio needs protection built in before trouble starts. One Passive Path student learned how to use protective puts in 2022. They applied the strategy to their portfolio. When markets dropped sharply, their losses were limited. While others panicked, they stayed calm. Their portfolio was prepared. Recession readiness isn't bought, it's built. So what does a recession-proof wealth plan look like? First, identify and increase cash flow streams. Look for assets that pay you regularly: dividends, rental income, covered calls. Second, train in risk management now. Learn how to hedge positions, use protective puts. Understand stop-loss levels. Third, build technical analysis skills. Recognize patterns. Read market behavior. Make informed decisions. Fourth, avoid over-leverage. Use debt sparingly. Keep control over your investments. Fifth, commit to lifelong learning. Markets change. Opportunities evolve. Stay adaptable. Here's a challenge for you. Create your first $100 per month cash flow stream this month. It could be dividends, a small real estate deal, side business, or options income. Once you master $100, scaling to $500, then $1,000 becomes much easier. The next crash will either scare you or make you rich. You've just taken the first step to recession-proofing your wealth with the Passive Path. If this gave you practical ideas like the video, subscribe so you never miss future lessons. And comment below what income stream you are building to protect yourself. Congratulations. You now have the knowledge to start recession-proofing your wealth, not just to survive the next downturn, but to grow stronger because of it. Remember, cash flow beats net worth. Preparation beats prediction. And becoming the right kind of investor is more important than chasing the perfect strategy. If you found value in this video, like it, subscribe to the Passive Path for more practical wealth building lessons. Comment below and share what income stream you are working on. Share this video with someone you care about, someone who deserves to be ready for whatever the market brings. Good luck on your financial journey. Feel free to watch other videos on this channel to keep learning. I'll see you in the next video.